You're wired in. SmallCapVoice.com. Following is a presentation of SmallCapVoice.com, today's leader in investor relations, capital formation, and retail support. Now, with your online business briefing, SmallCapVoice.com's Stuart T. Smith.
Welcome one, welcome all to another online business briefing brought to you by SmallCapVoice.com. And today, we're going to shine a spotlight on the cannabis industry, a space we all have been talking about for years now, and it seems to always have just another angle to it that we need to discuss fresh off the new banking laws that were passed last week, giving our U.S. companies an equal footing somewhat with our Canadian competition. We want to welcome to the show Jeffrey Goldberger. He's a managing partner at KCSA Strategic Communications, wonderful firm out of New York City. These guys currently have 40 plus clients in the cannabis-related markets. So Jeffrey knows what he's talking about because he oversees the firm's investor relation practice across those accounts. Learn more about KCSA by visiting KCSA.com. And through that, you can see all of their social media links. Without further ado, Jeffrey, welcome to the show, and thanks for taking the time to call in.
Stuart, thank you so much for having me. This is an exciting time for the industry, the cannabis industry, and also for KCSA. We entered the space roughly 6 years ago. We were contacted by one of the early applicants for a license in New York State, and we supported that group through the process. During that time, it was early days, and we learned a lot about what it takes for a group to get a license and started to think about how we might build a practice against that.
Yeah, and now that you've been well immersed into this field, let's talk a little bit about the responsibility for investor relation practitioners and what they really need to know when representing these cannabis clients.
Sure. One of the things in banking is know your customer. I think that underlies a lot of how we think about the cannabis industry. Not too dissimilar to the go-go days of the early days of the internet. Everybody wants to get into the space, and when that happens, you're going to have a number of really good players and good operators and people that have very sound business plans, and then they're going to have others that think that this is their day in the sun, that they're going to take advantage of a market opportunity. Some might be doing so and simply just don't have the wherewithal or the expertise to be successful. And then there will be others that have nefarious thoughts towards how they're going to make a quick buck at the expense of a group of individuals, mostly retail investors. So when we meet a company, we try to do as much due diligence as possible on the individuals who are part of the organization, what their backgrounds are, where they've had successes, where they've had failures in the past. At the same time, we want to understand their balance sheet. Do they have the capital, or do they have the ability to raise capital to execute against their business plan? All of these go into making sure that when we're working with a company that we can be successful for them, but at the same time we're protecting our own brand, which we've worked diligently to build, and we'll do everything to protect it.
Well, I brought up the Safe Banking Act of 2019 earlier, and obviously a lot of companies that may be private at this time will now be considering the path to becoming a public company, thereby increasing the demand for investor relations in this space. What's your take on that, Jeffrey? How do you see this Safe Banking Act affecting this market?
Well, I think the Safe Banking Act, broadly speaking, is a positive for this industry. You could be a very large company that's raised hundreds of millions of dollars from the capital markets and still is operating here in the United States unable to bank like a normal company does. It puts them at a tremendous level of risk at both the corporate level and at the store level. They operate retail operations where essentially they become a big piggy bank, which makes it very difficult to control the flow of money. And frankly, from a safety perspective, having that type of money and that amount of money at a single location and multiple locations is terribly dangerous. So we expect over both the near and the long term that the passage of this act will support regulation, but also a regular banking stream that will allow these companies to flourish. Whether or not in the short term, this allows more companies to go public. Frankly, is in question. If you see what has gone on in the public markets for cannabis companies, there has been a lack of money that has been raised in the public markets since probably November of last year. There were a number of very large RTOs, companies that did reverse takeovers, so they were U.S.-based, multi-state operators that raised hundreds of millions of dollars, including Curaleaf and Acreage, and had very successful offerings, and they were two of the largest offerings to date. But since that time, the market has cooled. You can see how even the big boys, such as the ones I just mentioned, their stocks have cooled, but it's had even a greater effect, a negative effect on smaller publicly traded companies. So this will sort itself out, and I think this is, frankly, again, there are so many similarities of what's going on today in cannabis of what was going on early on in the internet. So it's going to play itself out. Some companies are just going to attrit and go away. Some of them are going to go away through consolidation, which we're seeing across the board. And I think over time, it's going to right-size itself, and the companies that should be public will be public and will flourish. But it's going to take time.
Very well said. Great insights, listeners, from Jeffrey Goldberger, managing partner at KCSA Strategic Communications. On the flip side of what may on the surface, as you pointed out, be positive with the Safe Banking Act, we have been seeing and hearing a lot of news about the headwinds and a potential recession coming our way. So how can cannabis investors and companies prepare for the impending recession? And kind of more specifically, what does a potential recession mean for microcap stocks? Because we see in the past, recessions don't always filter their way all the way down here, but these microcap stocks in the cannabis space, what can they expect?
Well, whether it's a cannabis microcap company or a technology microcap or a healthcare microcap, life as a public company, as a microcap company, is difficult, even in the good years. Your cost of capital tends to be higher than a more established company, and only gets exacerbated when the economy is in the doldrums. So I think the challenge is going to be heading into a potential recession, and I certainly don't have a crystal ball and can't tell the audience when that's going to happen, but history would say that we're not too far away from it, is make sure that the capital you need to sustain yourself as a microcap company in the cannabis space is sufficient enough that you can execute against your business plan and not have to go back to the public markets when the economy is not doing well. It will cause you to dilute greatly your existing shareholders, and your cost of capital will go up commensurately.
Well, Jeffrey, at the outset, I pointed out that you oversee KCSA Strategic Communications investor relations practice across those 40 cannabis-related clients. So let's take a deeper dive into those practices of investor relations for cannabis-related clients.
Sure. I mean, the nice thing that KCSA has going for it is that we've been around for 50 years and have one of the larger outsourced investor relations practices in the country. So when we started getting involved with the cannabis space and representing those companies, we thought about how best do we direct those companies. And we came up with a handful of best practices. The first one is to adhere to what are tried and true investor relations best practices. Companies that are fighting for limited dollars and mind share should also develop a differentiated and defensible message platform. Why is one MSO different or better than another? Why is one ancillary service provider better or different than the other? You're ultimately saying, why should somebody give you money from an investment banking perspective, and why should a retail and institutional investor invest in you? So your messaging is really paramount to success. Another thing that we think about is most of these are nascent companies. They're growth companies. They're young companies, young management teams very often. So we tell our companies to communicate like the company you aspire to be. You act like a small company. You don't adhere to best practices. that as a negative. Think about how you want to be viewed. What company do you want to keep? Do you want to be a company that just went out of business, or do you want to be a company that has the legs like a Nike? Those are really important pieces. Another thing to think about is when you communicate to the lowest common denominator. In particular, with U.S. investors in cannabis today, because of the regulatory environment, most of the investors are coming out of the retail community. My mother, your friend, yourself, retail investors who aren't taught or don't act like an institutional investor. So it's important that you're very transparent, that you describe your business in terms that they can understand. Those are really, really important things. And then the final thing is, I think it's the obligation of all the participants in the cannabis space, and particularly the publicly traded companies, is that it's your collective obligation to educate the investors. Because, again, this is a new industry, and it's important that everybody gain the knowledge so that they can make sound, long-term investments.
Great stuff today, Jeffrey. We so appreciate your time here at SmallCapVoice.com. Thank you so much.
So, very appreciative, and look forward to speaking to you soon.
All right. For Jeffrey